Hi, morning, Dan. So the market has been almost entirely driven by sentiment. And when we talk of sentiment, it's basically the outlook for the global economic trajectory in 2023. That's how the year has started, but that has been the case pretty much, I would say, since December. Now, of course, as you mentioned, the parallel story since the start of December has been the Chinese reopening story. The reason I would say the oil market has been hesitant to price in the China reopening is that, as we've seen and you've discussed on your show, I'm sure, it's been a very difficult transition for China. So the picture still remains murky. There is a paucity of reliable data. There's plenty of anecdotal evidence that the virus has swept through the country. Hospitalizations and death numbers have increased. Look, Chinese oil demand coming back is a question of when, not if. But right now, the big uncertainty for the oil market is when does it come back and at what pace?
Exactly. And I know, look, Hadley's probably going to ask you about the politics and how the United States and OPEC are going to respond to this market in the year ahead. So I'll ask you about the sanctions, which is also another critical issue here. We've got this ban on products coming into effect at the start of next month. How much of an impact is that going to have on the market, which already seems pretty well prepared, pretty well based to manage a lot of these geopolitical issues that have been playing out through the second half of last year, and also the sanctions impact that's also been weighing on the market since Russia's invasion?
So I guess it would be a fair argument that the market had plenty of time to factor in, first of all, the December 5 EU ban on imports of Russian seaborne crude, and then subsequently next month, Feb 5, the ban on product imports. Now, the other reason, I suppose, for the relative sanguinity that we've seen in the markets has also been that throughout last year, post the Ukraine invasion, we saw China and India step up and take vast amounts of incremental Russian crude. However, I do feel that some disruption that we're already seeing in Russian crude exports since December, and the potential of disruption in the global product supply because of the ban on Russian product imports by the EU, I think to some extent it is sitting in the market's blind spot. I would say partly it's because, well, right now I think the market remains obsessed with what is the outlook for the global economy and on a secondary level, the outlook for Chinese economy. But also the market doesn't quite know what exactly to price in terms of product exports and how those will fare for Russia. So yeah, and the EU price cap on Russian product exports also is another uncertainty hanging over the market. So we don't know. The market doesn't know what to price in that. But what that really means that is we could see huge turmoil in the coming weeks as the picture becomes clearer, and then we have the market rushing to price in whatever disruption that comes to pass.